Good morning. Thanks for your company. This Tuesday, the 22nd of September. I'm Jessica Amir, a market analyst with Bell Direct. Well, overnight, a risk-off environment unfolded as the UK considers another national lockdown to slow rising infection rates. Now, that saw tourism stocks take a hit, Carnival shares losing 6.7% and Delta Air falling 9.2%. Elsewhere, we also saw investors sell down banks on allegations swirling that a number of international banks have been moving illicit funds over the last 2 decades. Now, in London, that saw Standard Chartered shares fall over 5%. HSBC shares sinking to a 25-year low, ending about 5% lower. In the US, a similar story, Deutsche Bank losing 8.5%, JP Morgan Chase down 3%. But there was some light. Technology shares slightly rebounded. Of course, US tech darlings have led Wall Street to a record high, but been hit by the September blues. So overnight investors indeed bit into some low-hanging fruit. So PayPal shares rose about 4%. Netflix, eBay and Apple all rising about 3% each. As for the US major indices, they wrapped up lower. The S&P 500 down 1.2, the Dow 1.8, and the Nasdaq only fell slightly, 0.1%. On the commodities side of things, a similar story spooked by fears that we are entering another lockdown. In particular, the UK oil lost 4%. It's now under the $40 milestone after climbing 10% last week. So it's now $39.31. Gold has fallen as well. It's lost 3% as investors are instead channeling their money into the most liquid of all safe havens, the US dollar. In terms of what to watch today, well, the local futures are suggesting a pullback of almost 1% following Wall Street's fall. Now, in terms of something to think about, we know stocks may be worth a look in hydrogen, batteries, green steel, carbon capture, storage, and soil carbon as well, given the federal government has prioritised these 5 things in terms of driving a low-emission, technological, safe next decade. Now, in terms of the economic side of things, the RBA Deputy Governor Guy Debelle will give a speech today on the Australian economy and monetary policy. So keep an eye on what is in the RBA's goodie bag, namely QE and cheap term funding for banks. So look for hints on negative interest rates, and if the RBA thinks there'll be a second half recovery in 2020 or a tepid recovery. As for trading ideas, API was downgraded by Bell Potter to a sell with an 85-cent target, implying a 17% pullback over the next year from yesterday's close of $1.02. Now, the reason for this downgrade is because pharmacy margins are quite low and their high profit businesses have been hit by lockdowns. In particular, 17 skin clinics in Victoria have been closed or are operating on restricted hours. This is why API, Australian Pharmaceutical Industries, is now a Bell Potter sell. And Lay-Buy Group, LBY, was initiated as a Bell Potter speculative buy, $2.40 target, implying 41% upside in a year from yesterday's close. What's key is it is a specky stock as it's making sales and it's in a high growth area, but it's not making positive earnings. The buy now, pay later provider is one of the leading players in New Zealand and has rapidly been growing their business in the UK, which is set to become the company's largest market. And LBY has formed partnerships with companies like MasterCard and retailers like Boohoo. So Bell Potter also likes that it's got an established network, particularly in the highly attractive UK area, all of which is why LBY is a Bell Potter speculative buy. Also keep an eye on JLG, John Ling, and Shine Justice, SHJ, as well as Aspen Group, APZ, all giving off bullish signals according to Trading Central's charting. I'm Jessica Amir with Bell Direct. Happy trading. Stay safe.